What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online as usual. Hey, this is the second day in a row that I am having to thank somebody from our community for providing some info that has led to a video. So, guys, keep it up, please. I think the more we can share info and tips and tricks and whatever it is that helps us all make money in fractional real estate, the better off that we're going to be. I thought this was a really interesting article, and it I'm going to talk about something that's been bugging me for a while, but I haven't really put it all together into, a coherent thought until today. And well, you be the judge of whether or not it's coherent or not. I've been a little hesitant to talk about it because it is, pushing into sort of some legal concepts and whatnot. I want to remind everybody, get the disclaimer in early. I'm no longer an attorney. Even when I wasn't your attorney. If that's not true, that's true for almost all of you, right? And in addition to that, uh, nothing that I'm trying to tell you is going to be legal advice. A lot of the words and phrases I'm going to use today are ones that I heard for the first time in law school, but it doesn't mean that you should take this as legal advice in any way. Um, yeah, I think that's about enough of that. I know I'm always giving you lots of disclaimers. I just want everybody to realize I just always want you to dig into stuff for for yourself. Hire your own legal counsel or real estate agent or whatever when the situation's right for that. But just don't. I'm just some guy sitting on my couch, right? Like you should just not trust anything I say ever. Um, I don't ever trust anybody, right? I always want to verify everything. Okay, so anyway, what's the story? Uh, Detroit, the city of Detroit, sues crypto real estate platform over safety and health violations. I added the word and, it's not there. You guys can read and you know that I screwed that up. So somebody sent this to me in the Discord or posted it in the Discord. This is about Real Token, which goes by RealT. People have asked me about this in the past. If I try to click on any of the buttons, it shows, a message shows up and says, "Hey, you're not in the U.S., so you can't sign up right now." I think they're having some SEC issues or whatnot, or so they don't they don't allow U.S. citizens to invest at the moment in any of the ones, except apparently every once in a while they have like a Reg D um, offering that they'll let U.S. people get into, but otherwise it's not available. But from what I've talked to a couple of other people and looking at the stuff that I have found about their site, I think it's really easy for most people to think this is like the same setup as Lofty, and honestly, I'm not sure where they differ and where they're the same. I asked AI about it. They didn't tell me very much that was different. I did a whole bunch of searching online. Uh, it was I talked to a couple people that are invested on RealT, but I feel like some of those people just don't really understand. And I'm sorry if that was you that I was talking to. And I think that's true though for a lot of us on a lot of these platforms, right? Like we really can't say exactly what our legal ownership looks like, um, and how it's differing from one site to the next. And I think it's important for us to try to understand that as much as possible. But at the same time, it's part of the reason why I really like to diversify across platforms, right? In case you run into problems on a specific platform, I think that it's good to have that diversification. One of the things, a lot of times when people are like, oh, well, they're selling securities and they shouldn't be, I'm not terribly worried about if one of the platforms is violating securities laws or it turns out they are inadvertently. I don't think, that might impact the platform. It might make it take a while to get our money back. But I don't necessarily think that I'm at any risk of being in trouble. Again, do your own due diligence on whether or not you're at legal risk there. Uh, Before I forget, please like and subscribe. In the description to this video, I have links to all the platforms where I'm currently invested in. Uh, do your own due diligence on those platforms and on any properties that you see on there. Don't just buy them because you see me buying them, or don't just not buy them because you see me not buying them. And then also our Discord, the one that somebody shared this in today, where we have over 100 now participants that are in there sharing info on a number of different platforms. There's a link to that as well in the description to this video. Okay, back to this video. That was our sponsor, me. Um, so let's see. So what's happening here? So the platform, uh, owns a whole bunch of, or individual entities. They sued Real Token and 165 affiliated LLCs, right? Like affiliated. And this is one of the things. This is where I start to worry about: are we going to get in trouble on other platforms and get roped into the legal messes of, like if I'm on Lofty, I'm invested in one DAO. Can I get roped into the legal issues of another DAO? And I know a lot of you that think, you understand how this works are going to immediately say, no, we're separate legal entities. And that could be true, but that's what I want to explore a little bit. But so, okay, the city say, oh, they have 400 properties across Detroit. They had been managed by third-party managers. All sorts of things weren't addressed. There's lots of problems. The properties are in disrepair. The platform or RealT says, oh, well, we were just stolen from by those property managers. We had been paying them. They weren't doing their job. If you've been on Lofty lately, this sounds really familiar, right? And people are accusing really all of the large third party managers of doing, or most of them of doing a poor job, mismanagement. Um, there's a little bit of a discussion about that on the lounge call a week ago or so. And Tim was making some comments. If you guys don't know who Tim is, he's active in both our Discord and Lofty sometimes. He's a property manager himself, and he was sort of vocal about, or making some comments about, it's not just the property managers. The Lofty platform and the way we interact with those property managers is part of the problem. And I think, Jerry seemed to sort of just shrug that off, but I think that Tim is right. Obviously, a lot of those property management companies, I'm not saying they're faultless, right? I think they've caused a lot of their own problems, but I know a lot of people that use third-party property managers successfully to manage their portfolio. They have to be more actively managed. You can't just hand it off to them and just expect that they're going to do a good job. But it is something that I think as DAOs, especially like the legacy ones where like Lofty's Ops is the only in between, I think we're a terrible customer. And so that leads us to getting the worst possible service from a group of companies that already provide pretty bad service. And so, anyway, that's sort of an aside. But that so their experience seems pretty similar. And so one of the things that I think is interesting, I found this other article is the company itself, RealT, took over. It sounds like anyway, they took over. Oh, am I looking at the wrong one now? Was it in this article? They took over management of all those properties. Come on, I have a map of where they're all located, and it's a lot of properties all in one city. Okay, well, I don't know what I did. Lost the map. Oh, maybe it's further up. I think it is further up. Let's keep going. Yeah, look, so you can see, and this is why I think this became such a problem, is 400 plus properties in one city, even if it's a big city like Detroit. That's a lot of properties to be running and having so many of them with problems. But so they stepped in, the company itself, and tried to run things. Um, this reminds me a lot of the recent issues with Yom and not having issues with property management. Not the same thing because we didn't have this widespread, um, non payment or terrible living situations for tenants or whatnot. But one of the things that it seems like RealT, the company itself, said, okay, we're going to actively fix this. It seems like that's something that Lofty is not willing to do, which I think is both good and bad, right? I mean, one, I think they're just not set up for it, right? And so luckily, on Lofty, we had Earl and Alec and Josh all step up and try to take over certain properties. But I think in an instance like this, where you just have a failure of a bigger property manager who's running a bunch and doing a poor job, um, I don't know. This gets into the argument of like, is decentralization better or worse, right? And I think one of the things that I'm worried about is that we are getting most of the downside from decentralization, and we may not be getting, the distinct be the fact, we may not be getting the benefit of being distinct legal entities. And so that's what I want to get into a little bit more here. But so, they are being sued 165 entities plus the platform itself. Um, And so, are we at risk of that, right? So like one of the things I want to do is I pulled up Akron, right, where I know we have a bunch of properties there, and I just put in Lofty, right, just Lofty, and all of these properties popped up, right? Now these are all distinct LLCs, right? But if back when if you were going to sue somebody and you want to find out what assets they have, you find what they name one entity, you put it in the public records, and you see what else do they own. Like this is something that people have done, numerous times. Not necessarily when, like I've done it a lot as a real estate agent, saying like, hey, I want to buy. They have this property for sale. What else do they own? Is it something I can buy from them? So even though the name of your LLC doesn't really hold any like weight as far as like, are these entities connected? They do make it really easy for someone who wants to sue one of these to think about, do you have other assets for me to go, to go after? And so yeah, I mentioned the Yom issue, right? And I think that we're also seeing it with Evernest, right? Evernest was managing um, several properties. They're holding up the process of turning over all of them because some of the entities owe Evernest money. Now, this isn't to the point where it's a legal action, but we see where you know other our counterparties in the marketplace seem to think that these are related entities, not that they're individual entities operating on their own. I mean, we saw that a bunch with Yom, right? Like he just keeps talking about the Chicago portfolio and the Ohio portfolio, and that these are, he's not separating them as far as like, no, we have to figure out from one DAO at a time who owes who what, and let's move forward, right? And that's we're running into the same problem with Evernest at the moment, and we could be right, but it might not matter, right? Unless you're willing to take that to court and on a one by one basis. And so, what are we doing? So some of the things that I think put us at risk of this, right? Where like, okay, if there's one good property in this market and I own it, am I worried about something going wrong with any of these other properties and me ending up getting sued over it? And I think that, in a normal world, like if everything worked perfectly the way you thought, I'd say the answer is no. But I think the way things are operating, that we're at a real risk for this. And there's some things, I'm going to go over the things that I think, lead to this. And again, not legal advice. This is just stuff that I worry about. Um, Partially because I went to law school and I took a lot of this sort of business entity, liability type classes, but it doesn't apply everywhere, right? It might not apply in this state. LLC laws vary in every state. So again, just throwing some thoughts out there. One, whenever we have these cross DAO votes, when we have all the DAOs operating in this, in unison, working against a counterparty, right? So like we did it with this Ryan tax group, we've done it with the insurance providers. Anytime that we're trying to get the benefit of being one large group, but at the same time saying, no, 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 we're legally distinct entities, we're just working together in this, but we're not making that very explicit. I think that puts us at risk. When we have one contract for all the DAOs. I think that's like what we had with Yom, right? Then we were trying to renegotiate the contract on behalf of all the DAOs. Like that, I think was the most egregious error. I mean, the fact that they were just adding DAO names to a contract that was, already in existence originally, that worried me to no end. The fact that Lofty acts as a single point of contact for a lot of this stuff, and again, this is mostly the legacy properties, and they're getting away from this. Um, but one of the things that I'm curious about is how far into the future do we have to get before that activity stops, putting us at risk? And I'm not sure I know the answer to that. So yeah, I already mentioned collective bargaining. We also have a lot of common ownership, right? And so, one of the things that if you've been around business as much at all, you hear about, piercing the corporate veil. It's actually something that gets talked about a lot. Doesn't get, in practice, it doesn't happen nearly as often as you would think based on how much people talk about it. But it is a real risk, right? And what that means is like, okay, when you have an LLC, or any legal entity that's a distinct entity, it limits liabilities, right? Like it is the liabilities inside that entity don't flow to the owners, right, or don't flow to other people outside of that entity. But there's this whole segment of law basically that talks about piercing the corporate veil. There's a bunch of different like ways to do this, and then there's also this thing called control group status, which is sort of a distinct thing, but it's somewhat related, where like you can have a whole bunch of entities that are legally distinct entities, but because of common ownership, because of the way that they're managed and controlled, this is typically the IRS, can assign control group status to a group of entities. And then you see it in like employee compensation type law where you'll have employer liability spread across different entities. It's not something that's necessarily broadly applied, but it is um, similar ideas of it get used in this sort of piercing the corporate veil analysis as well. And one of the things that you have to realize too is like we are in sort of a new world here, right? Like there is, there's always been uh, syndicators and whatnot that have a bunch of related entities, but usually there is this sort of individual controlling them, or so a common sponsor or whatnot, and so it was much easier to assign liability to the one individual, and he's that person's involved in all the entities. Well, here we're looking for broader, y- you know, I said it earlier and I forgot, but we're broader separation of all the entities, um, and I think that that's a more decentralization. I don't know why I'm just getting stuck on that, but I think that that's one of the things that as people that invest in these and are looking at it every day, it seems like you start to just really believe it. But a judge sitting in a lower court somewhere who's seeing like landlord tenant issues repeatedly, and all the entities have this similar name and they've got the same point of contact, and are they going to take the time to really understand what that ownership looks like? I'm not sure. But anyway, back to like if there's a piercing issue, right? One of the things, there's a lot of different things that they look at, whether or not they're operated together or not. And so that's when I think like that's why the cross DAO votes worry me. That's why the collective bargaining worries me. But then they also have this idea of like they call brother sister entities with horizontal piercing, and they have a pretty simple test for that. Is like, are there five or fewer individuals that combined control more than 50% of the voting rights in across these entities. And that's one of the things that I'd really like to understand. You can look on the blockchain and figure out which wallets own how much of um, each DAO, but you can't really know how much. Like I know there are people that have multiple wallets, and so um, I'm sure there are, I know we have some whales on the platform, people that have like really big investments in a few properties. And then some of them, like, so for example, maybe the Madison properties. I don't know this for sure, but I know there are a couple of large owners. And if you have, two or three or four people or up to five that combined have 50% or more of the voting rights, in across those entities, well, there's some chance then that these are now brother sister entities, and there's some potential for horizontal piercing, right? So if somebody goes after one of them, they're going to be able to go after all of them, right? And so, that's a real risk, and it's one that I haven't heard anybody talk about. Um, I think that maybe the maximum ownership should be lower than 15%, right? Maybe it should be in an amount that you could ensure that you'd never have this brother sister entity issue, right? Because all you have to do is make sure that no five people could own, I mean, if you limited it to, you know, under 10%, then five people could never have more than 50%. Um, so I think that that's something that we could look at, that could change, but it's something that's problematic at the moment. And I don't know how widespread it is. I do know that there are some large owners that have, just in their large owners in several properties. And if you had the same two or three, um, I don't know, it's something I worry about. It's something I don't know how much real risk we have there, especially those properties where they're all lined up together. Um, are we, they're all managed by the same manager who, that's just one example, right? But especially because they're on the same street, they're managed by the same manager. I don't know what their entity names are, but I'm sure by looking at them, there's a good chance you'd be able to figure out they're related, right? Um, and then if you do have this common ownership group, that and it doesn't have to be, it doesn't matter that I own a tiny bit of two of them, and so I should be distinct. Like if they can pierce horizontally, they just can do it, right? It doesn't matter if so they can just go after the assets of the other entity. It doesn't matter that there's some minority holders in that other one that aren't part of the one that they were piercing from, right? And so that again, I don't know if in New York that is going to be the test, and that's how it works, right? Because that's where those properties are. Like it's just again just thinking out loud about all these things that keep me up at night. Um, and so one of the things, like I think this is a horrible idea that we use all the same LLC names. Like I said, I don't think it carries any legal weight that you have similar or the same LLC names or the same words, but it does make it very easy for somebody who's thinking about suing you at one property to do a very quick search in the public records and realize, ooh, you've got a whole bunch of properties I can go after. And that makes you a bigger target for, if they bring this to an attorney, and they might not do the work and figure out like, oh, well, these aren't actually um, the same thing. But then you start to look at their entity agreements, and oh, they all have the same operating agreement, and where I start to wonder like how much, like when I really think about this, it does seem like there's somebody would be on pretty strong footing if they wanted, especially if this 5 and 50% rule for properties that applies to is where I think it gets really scary. And so for that, if you have like a co-owner who's bringing properties to the platform, and they have a pretty big chunk of some of them, and then you just have one or two other owners that are investing alongside that same co-owner, well, all of a sudden now you have more than 50% ownerships or voting rights. I think the 50% is typically looked at as voting rights, not actual ownership. So I don't know. I think that there's different ways that I know we already have some scaled voting, but even with that, I think a lot of times you'll have one or two large token holders that can working together with the co-owner, and you'd be in trouble. Um, So, all of those things, I think that if we're going to have true decentralization and try to be legally distinct entities, I start to wonder, like, how many of these things, okay, well, obviously we shouldn't ever be doing this, where we have DAO-wide or platform-wide votes. And we shouldn't have multiple DAOs entering the same contracts, excuse me, with property managers, right? They should have their own individual contracts. And what else? I mean, again, this is not legal advice. This is what I think, right? Um, should we have different law firms creating our operating agreements? Should we, how much does it matter that they're all the same template and format and whatnot? I definitely think we should have different LLC names. Everyone just pick one that's different. Have no way that I can plug in some piece of one and return 14 properties that are all somehow related, right? I mean, I think that's I think pretty clear. But then, one of the things is we could fix all this stuff and still have, just like it doesn't mean just because those 165 affiliated LLCs got sued doesn't mean that they're necessarily right that they're operating together, right? But I think that's one of the real risks is like anybody can sue anybody, and then the onus is on us, right, to really just prove that no, we're not a related entity. And then okay, once we put that forward, like no, look, these are different entities. It's not like a subsidiary relationship, right? Because that's the first thing that you go to, like, are these all subsidiaries of Lofty? And they're not, right? Lofty doesn't own these. Um, And then so you put that forward, and then they'd be like, okay, now if we want to do this horizontal piercing, we're going to have to look at evidence and whatnot. But I think it could turn into a real mess for us before we get to that point, right? And so that's what, like, even if we're right that we are distinct entities, like, does it matter in practice? And so, like, well, if it at the end of a lawsuit, it might matter, right? Like with the outcome, but in getting lumped together and getting sued together, I think it doesn't necessarily. And then in instances like the Evernest dispute, like the Yom dispute, where like they basically hold one entity hostage over, the debts of the other entities, until we're willing to, as individual DAOs, enforce our legal rights, uh, I think it doesn't really help us to say that we're different. And so, I think in practice, it's probably better to separate ourselves as much as possible, right? Like have the DAOs have individual point of, single point of contact, like not each DAO have its own point of contact with whoever the property management company is that we're hiring, right? Not have this single interaction like what Lofty was doing, and even now, like, I wonder, like, under the ecosystems LLC, or the Waylick ones, right, or M1, like any of those, were now okay. We have uh, a group of DAOs that are managed by that group, and then that group goes out and contracts on their behalf with a third party property manager. Like in that instance, okay, now you have the single point of contact. Like I think we need to be just making it extremely clear to all of our counterparties that no, this is a separate ownership group. I mean, like we were dealing with this with a couple properties that Earl manages today, where like okay, there's two properties that we're thinking of selling, and both of which were mentioned to a real estate agent. One of he's listing one, the other one's mentioned as well, and we're getting an offer, or got a verbal offer at least at first, and I think it's turning into a written one where they're like, okay, I want to buy them both, and I'll give you X dollars for both. And so we had to go back and say, or Earl did, and say, no, look, these are separate entities. We can't bargain. We have to get separate offer for one and the other, and they can't be tied together, right? Because that buyer's like, well, I only want this one if I can get that, if I can get that one too. But so we always, in every step of every process, as much as possible, need to make it clear, like, these are separate entities. It's not the same decision makers or owners in each, if that's true. And that's what I really started to wonder about. Like for some of these, I think it's probably, if you look at who's busy in the Discord and who's voting on stuff, like I think there are probably a lot of the DAOs that maybe it is the same four or five people that are controlling them. Now, part of that is because not everybody votes, right? You have a lot of people that just aren't voting in some of these. But yeah, I mean, I don't know that when I was thinking of, about the 5 and 50% test, it really makes me wonder, how much we're at risk of that, because I think there are people that do have large chunks across multiple properties. So anyway, that's all the stuff I've been thinking about this. I don't know, one of the reasons that I do think about it is because there's this big argument, like, do we want a decentralized platform like Lofty, or do we want one where you just have like this sort of central, it's still, there's still some decentralization, but like Mogul, where you have, like, these professionals that are running it, but you do have these separate entities that people own. And I think that you get a lot of benefit from that, because what we're doing is really like taking advantage of the knowledge and experience of the Mogul team when it comes to the investing in the properties themselves. On Lofty, you don't get that at all, right? You might get it from some of the individual co-owners, but you're not getting it from the platform whatsoever. I mean, they're not, there's no, they always say, like, we're not deciding what investments get to go on there. We'll let anybody put a property on there as long as it's legal. And so, you're not getting that benefit of that, like, centralized decision making. But okay, so we're giving that up, but are we actually getting a true, the reason I'd want a very decentralized platform is to have in large part to mitigate risk, right? To mitigate the single point of failure type risk. Um, and it does in some ways, but this is one of the ways where I think, maybe it doesn't, right? Like maybe, especially if you had one larger property, like say Brownfield, where we're talking about a couple of $1 million there, versus a lot of these entities have like $100,000 property in it. Well, if you did have a dispute in one of the larger ones, and there was a very large, claim made, and you could easily, if you could rope in some of these smaller properties that or DAOs that own their properties free and clear, I think there's a real risk of just sort of wiping out, being like, oh, okay, let me take that property. It's free and clear. There's no creditor to deal with. It's easy to take that property and see what's in it. So if we get to this situation where we can see, yeah, we can pierce the veil there. And again, like I said, I mean, it doesn't happen nearly as much as people talk about it. Like this is a theoretical risk I'm discussing. But I think that but there are, objective tests out there that you can look at. And the more I think that we could be protected against those objective tests, the better off we would be. Um, eh, and then the thing is like I said, even at the end of the day, even if we are completely right, like, does it matter, right? Like if you're just getting sued by the city and they're lumping everybody together, and you still have to convince a judge or maybe a jury of your rightness, right? And your um I don't know, and that kind of stuff gets messy, right? So like the more that you can do things to just stop it from being an issue to begin with, right? And so like it would be great if Evernest didn't know that there was anything that these different entities had to do with each other, right? Like they didn't in their head or in their system say, "Oh, these are all Lofty related DAOs, right? Or Lofty related LLCs." They just thought, "Hey, this is 20 different clients that we have that each only own one property that we manage." And, if they look at us like that, we have to give up the collective bargaining power, right? We're not going to get a discount. We're going to pay whatever their highest rate is. Um, but maybe it's worth it. I don't know. So just some stuff to think about. I'm curious. I think there are a couple of attorneys that I was going to say other attorneys, but I'm not an attorney anymore. I retired my law license. Remember that. Um, but that at least one that's watched this in the past. And if you've got thoughts on this, I'd love you to share in the Discord or in the comments, or even just DM me if you think that I'm way off on some of this stuff. And I'd be happy to, correct or retract any of it. Um, it does just worry me again. I mean, I think like because it's a large part of the appeal to me of the decentralized platforms is the really limiting my risk from one entity to the next. It's something that I've tried to do with my own entities in real life. um, but obviously in certain instances I'm not getting that benefit anyway, right? Where you can have this um, and I guess too, I want to make sure it's clear, like that 5 and 50%. This is, it doesn't just mean you automatically, because obviously, like the properties that I control, all of them, that I own outright, I'm not, they can't just automatically pierce across, right? They have to. That's like in addition to that, um, be operated in a way that you could construe them as being the same entity, right? I think hopefully I don't think I made that clear when I was talking about that early on. Sometimes I have way too many thoughts floating around in my head, and I probably should make a script, but I would never put out any videos if I had to take the time to do that. But yeah, so that's just one of the things that they do, but you can't just automatically then group them all together because you have that common ownership. You have to also then complete the other tests where you're um, where they're basically be acting in a way that benefits them as acting together, right? And again, the tests are going to vary a little bit from one place to the next, but it is something. It's certainly not a. I think it's a non-zero risk, right, that this happens. Um, and so I don't know. I just putting it out there. Curious what you guys think. like I said, I mean, I think there's a couple things that you could do real easy, like not have the single point of contact, not have all the entities name the same thing. Maybe have a couple different providers do our operating agreements so they're not all exactly the same. That's one that I just don't know how much I care about because, like, if we get to the point where they're looking at our operating agreements, well, maybe not. So maybe some property managers are asking for those up front. I know title companies will do it and whatnot. So anyway, that's just all the worries that I wanted to dump on you today. Until next time, I am just going to keep making mistakes so that you don't have to.